Hello folks, welcome to ARC again. Today we are discussing from financial management. In this video we are going to discuss about what is finance. We're going to define the word finance in this video with examples. Let's get into that. The word finance has its origin in French word from fin. It means end or satisfying. Later this word fin changed to finer, which was used for settling a debt. And later this finer was used in English, and as fine we all know that, which means paying a debt, compensation, taxation and revenue. And we also today use the word fine for paying penalty. In the 18th century, finance got recorded as management of money in French literature. Finance had multiple meanings in the past, but as of now, finance is used on behalf of management of money. We learned that finance means management of money, but is there any need or necessity for us or everyone for learning management of money? Let's see. In the economics, we have learned that humans have unlimited wants, but to satisfy these wants, the means are very scarce. That means that we have many desires, like we want to buy a car, we want to have a house, and we want to become so rich, and we want to lead a luxurious life. But have you ever thought that, do we have enough money to satisfy all the desires of us? Or if we start satisfying all these desires, do you guarantee that can we satisfy all the desires that raise in our mind? We can't. So when we compare to the resources financially or any of the way that we have to satisfy the desires that we have are always very low compared to the desires. So whatever the scarce resources that we have, we need to satisfy the desires, or we need to satisfy the unlimited wants that we have using those scarce resources. But we have to do that utilization very effectively and efficiently in order to get a maximum benefit of it. Let's try to understand these two words, effectively and efficiently. Effectively represents getting an qualitative output, and efficiency represents getting an quantitative output, like getting a high quality output represented by effectively, getting an high quantitative output represented by efficiently. For example, you have gone to a restaurant and you have ordered 200 rupees worth of coffee, and you have got a small cup of coffee and you have tasted. You realize that that's the worst coffee that you have ever tasted. Then efficiency, the quality of the coffee is low, and also the quantity you have got is very less. That means efficiently it is very low. And you have gone to another restaurant and you have ordered just 100 rupees of worth of coffee, and you have got a better coffee and a better quantity of coffee compared to the first restaurant. Then the second restaurant output, whatever you have got, is effectively and efficiently more compared to the first restaurant's coffee. That's how you can understand effectively and efficiently. We ourselves cannot take decisions which gives us output efficiently and effectively, but finance is the science which helps you and which enables you to take such kind of decisions whenever you're gonna invest your resources in something somewhere that will enables you to get maximum and qualitative profit or benefit out of it. So every person who wanted to use his or her own resources for getting their unlimited wants satisfied or having or want to have maximum benefit should learn finance. Till now we have learned what is finance and what is necessity for a normal individual to learn management of money. Now we will look into what are the activities that we're gonna do while we manage money. Let's see the activities. First one is borrowing, second one budgeting, third one forecasting, fourth one investing, fifth one lending, and sixth one is saving. Let's try to understand in a story format all these 6 activities. If a person don't have money and for his survival he will borrow some money from a lender. After borrowing that money, he will try to plan for all the activities that he have to do for his life. He will plan whatever the money that he have for different activities. After that, he will forecast, if I invest this money in this particular activity, do I get more return or less return or no return at all? Do I get into losses? That kind of thought is forecasting. That thinking is called forecasting. That means we are going to forecast whether we are going to get profit out of it or we are going to lose. If we think that we are going to great profit, then we will invest. That is investing, putting that money into that particular activity for executing. And then we do, if we have profits, then we have more money and we can lend some money to others who want to borrow from us, and we can save that money if we don't want to give to anybody. In this story, we can understand that borrowing, budgeting, forecasting, and investing, lending, and saving are the activities that we do with money. And these activities are studied at different levels in the subject of finance so that we can do very effectively and efficiently all these 6 activities without getting into losses. The 6 activities of finance are happening or happened till now at 3 different levels. Finance deals these 3 levels in 3 different subjects. The first happens at personal level. It is studied under personal finance. This finance is related to a single person or a family as a unit. The second level is at corporate level, like a company or business firm. This level is studied under corporate finance. And the third one is government level, like how a government acts in an economy. That is studied under public finance. These are the 3 types of finance or 3 levels of the study of finance. Now let's see what is personal finance. Let's now understand personal finance. Personal finance deals with how an individual or a family budget, spend, save the monetary resources taking into consideration of the financial risks and future life events. For example, every family in this world consists one or the other who earns money for the livelihood of that family. And the earned money goes under these 3 processes: budgeting, spending, saving. And while the family or the individual do these 3 processes, he or she consider the financial risks and future life events. Financial risks means if they use up all the money that they have, what kind of risks that they have to face. And also if they want to do something in the future, or if they want to buy a car or own an apartment or shift to a new building, like such kind of future events, they start saving from today. So such kind of decisions or such kind of earning patterns, spending patterns, and saving patterns, how a person have to do these three things efficiently by considering the financial risks and also future life events to maximize the monetary resources and also the benefits he or the family want to get out of the monetary resources. This thing is studied under personal finance, which is very useful and necessary for every individual on this earth. Unfortunately, personal finance is not taught anywhere in any of the university because this is not what the corporates expect. Now we're gonna see some ways how a person can finance himself. A person can finance himself through bank products, through checking, saving accounts, and credit cards, personal loan. A person can save his money in a saving account in a bank. He can get a credit through the credit card. He can also take or borrow loan from a bank with some interest. And he can also invest money into the stock market, bonds, or mutual funds. These can be done expecting some return out of the shares that we are going to invest. The risk varies in the above three. And the third one is insurance. We all know that life is filled up with uncertainty. We don't know what happens when. We should be in a ability to face everything whatever it happens in our life. These are the products which gives you that security to face uncertain situations in your life or your family's life. Life insurance, health insurance, disability insurance comes under security benefits. Employee benefits. Whenever you get into a company, there will be some benefits for you, like they offers you retirement plans, like giving you providential fund and also the retirement pension, like, and also social security and also the income tax. All these things comes under employee benefits. These are the few ways how a person can finance himself or herself. So this is a vast subject, so we're going to stop it here. Now let's look into the public finance. Public finance studies the role of a government in an economy, how a government have to act between the people, the consumers, and the producers. And an economy is something where the money flows continuously. Production happens, consumption happens. All the production and consumption have to be mediated between. So in such a situation, how a government have to act, what are the activities that a government have to perform in an economy, such kind of issues are studied under public finance. Let's see what are the different subdivisions of public finance. Public expenditure, how government going to spend the budgeted amount for people's benefit. Public revenue, how the government going to earn by taxation out of the income of normal people and also the corporates, and how a country going to take debt from the foreign banks or from other countries, like public debt. Financial administration, how a country or how the government of a country going to deal various financial activities, and how this central government going to finance the state government, because states are things which pays tax to the central government, and central governments have the responsibility to give back the money for expenditure purpose of the states. These all the activities, the 5 activities, are going to be studied under public finance. Now let's see what is corporate finance, which we're gonna cling on for a few more tutorials. Now we have come to a very beautiful and interesting aspect: corporate finance. Corporate finance is a branch of science which deals with the sources of funding, capital structure, and various managerial actions in an organization or a business, and also the analysis tools for used for decision making. And all these things are done only for the purpose of maximizing the shareholders value. You can see the blinking text. The sources of funding: how a corporation need huge amount of money. Sometimes the shareholders may have the money or may not have the money, and in such situation the company have to borrow some money from lenders. So in such a situation, there will be decisions whether we have to raise the fund from the shareholders or we have to go out, take loans from banks, or get some loan from the government, or such kind of decisions are studied under sources of funding. And if it comes to the capital structure, by varying the capital structure, the profitability of the company or the value of the company varies a lot. So a company have to search a optimal ratio between the debt as well as the equity, so that it always experience, the shareholders of the company can experience maximum value. And various managerial actions which we study in the few further tutorials, and also analysis and the tools which are used for decision making by the managers, especially the financial managers, are studied under corporate finance. In the beginning of the tutorial, we have seen the title financial management. Yes, we are learning financial management. Let's understand what is financial management. Many of us think that there is no difference between financial management and corporate finance. But yes, there is difference between both. Principles of management teaches us how managers have to plan, organize, direct, control the activities of a firm. And corporate finance teaches us how to take decisions regarding various financial activities. Since a corporate deals with huge amount of money, complex work, risky decisions, one person cannot do the whole. So, the financial management comes into picture, teaches us how a group of people led by a manager have to execute all the actions regarding the financial activities of a firm. So here is the definition of financial management. Financial management means planning, organizing, directing, and controlling the financial activities like procurement of funds, utilization of that procured funds, only for the wealth maximization of the shareholders. Since shareholders cannot intake directly in the execution of these activities, they recruit a manager with a group of people and they give the responsibility of doing all these activities. That manager plans whatever the financial activities, and he organizes the activities for various departments, and he directs the departments and the individuals for executing their tasks, and he also controls whether the person who got allocated with some particular task, whether doing it or not. So the manager takes up all the responsibilities, and this manager's primary goal is to wealth maximization. That manager has to maximize the wealth as far as possible. So financial management science helps the manager to take the decisions efficiently and effectively for affecting the firm for a maximized wealth. So this subject helps a financial manager to take decisions efficiently and effectively. In this lecture of finance, we have learned the definition of finance, and we have seen what types of finances are there, financial management as well. In the types of finance, we have discussed personal finance, corporate finance, public finance. These are the learnings of this tutorial. We're going to focus on finance functions and also long-term decisions, short-term decisions. Long-term decisions are further classified into investment decisions, financing decisions, and dividend decisions. Short-term decisions are classified into working capital decisions. In the next tutorial, we're going to learn about all these topics in detail with examples. Like, share, subscribe. Please support the channel. Signing off, yours Prem Kumar.